Is the Silicon Valley housing market about to shift, or is this the perfect time to make your move? I'm Shannon Ellison, and my goal is to help you cut through the noise and make smart decisions in today's market. Whether you're thinking of buying, selling, or just keeping an eye on the market, here's what matters for you right now in Silicon Valley. Let's look past the headlines and focus on what's truly happening here in Silicon Valley. With that, here's my May market update. Market headlines versus local reality. Despite the noise, elevated rates, tariffs, and global headlines, the underlying stats continue to point to a healthy housing market. Mortgage purchase applications surge. This is the time of year we start to see the seasonal peak of purchase application data, which helps to project 30 to 90 days out for purchase activity. However, the last 2 weeks, purchase applications have double-digit year-over-year growth. The buyers are getting comfortable enough to jump back in. Stock market rallied back as tensions eased, which not only helps consumer confidence, but is also a major factor in local buyers' down payment. New construction and housing start permits are slowing. That leads to less competition for existing single-family homes, which is good for current homeowners. Active inventory is growing, giving buyers more choices, but there's no flood of panicked sellers. Price growth is slowing, which is positive. When prices rise too quickly, we risk corrections. This moderation is healthy and sustainable. Updated housing data statistics. As far as statistics, we continue to see good news across the Bay Area real estate market this week. Housing inventory increased by 2.1%, with the majority being in the townhome and condo category. Pending sales increased 3.7% overall. There was a large discrepancy in the two categories, as townhomes and condos saw pendings decrease by 1.3% week over week, while single-family homes sales surged with a 6% increase. The average days on market have stayed consistent and even decreased a bit over the last couple of weeks to 14 days. Single-family home prices continued to appreciate month over month and year over year. They currently average $2.458 million. The average townhome and condo price slipped for the second consecutive month, but are still up since January. Once again, no doom and gloom data trends in the local real estate market. So what's different this year? In the last 2 years, we'd already seen the seasonal peak in home sales by now, with activity dropping off. This year, don't be surprised if the market stays active longer. Consumers are waiting for rates or headlines to change, but so far, things remain calm and steady at the local level. There is no sign of a wave of new inventory. Most homeowners are locked into historically low rates and historically high equity, so there's little incentive to sell unless it's the right move for their household. Rates, tariffs, and the Fed. Rates are stable. The Fed has held rates steady for 3 meetings in a row, with no projections for cuts until at least June. That's a sign of stabilization, not uncertainty. Tariff headlines are making some buyers nervous, but so far they haven't had a real impact on the housing market. How about a recession? No recession? If we continue to get good economic news, rates will likely hold and confidence will grow. If we get bad news, rates could drop, which would most likely bring more buyers off the sidelines and increase competition. Theoretically, both avenues are wins for housing prices. So what does it mean for you? If you're a buyer, this is the window that you've been waiting for. Seriously, it is time to act because it may not last long. Less competition, more inventory, steady prices, and stable rates. If rates drop, you can refinance. If prices rise, you're gonna wish you had bought now. Don't wait for Silicon Valley crash, because it is not coming. There is absolutely nothing to support this possibility. The current opportunity means buying without bidding wars and banking on future appreciation. If you are a seller, no need to panic, but don't expect a frenzy of multiple offers. Price your home right, make it shine, and you'll do well in this balanced market. If you're not getting the offers you want, it's likely pricing or a presentation issue, not a market collapse. My final thoughts: don't be surprised if the second quarter activity shifts to the third quarter, basically meaning that the fall market becomes the spring market for 2025, meaning more fresh inventory coming to the market and rising sales numbers. If you want tailored advice for your situation or a deeper dive into your neighborhood, reach out today. Drop your questions below, subscribe for more updates, or contact me directly. My team and I are here to help you navigate with confidence. I'm Shannon Ellison, here to educate and navigate, not speculate and fabricate. I look forward to hearing from you, and I will see you guys next week.